Steel is set for a record year, and these top steel stocks stand to benefit. Steel demand is rising as margins improve. U.S. Steel. U.S. Steel's merger arbitrage opportunity is still in play. ArcelorMittal. ArcelorMittal's valuation is lower than you'd expect for such strong financials. Steel Dynamics. Steel Dynamics just had its second best year and reaffirmed a commitment to returning shareholder value. Let's dive in. Here are the three top steel stocks providing portfolio strength. Welcome to Timely Investment Research. Steel demand is set to spike, and these top steel stocks are among those best positioned to capitalize on the opportunity. Analysts at Fitch Ratings project steel demand to grow by as much as 30 million global tons. The same analysts expect improved margins across most major steelmaking countries, except China, in this case, and North American steel sectors, to increase self-reliance and move away from national net import status. Top steel stocks are tricky to pick because, as with any commodity stock, high capital expenditures, global supply chains, interest rates, and more combine to make pricing tricky and volatile. But each of these three top steel stocks is strong on its own merits, which, combined with an improved sector outlook, could mean big things in 2024. Number 1. U.S. Steel. U.S. Steel stands out as, potentially, the premier top steel stock of 2024, though perhaps not for the expected reasons. A few weeks ago, I recorded a video about U.S. Steel's status as a prime candidate for merger arbitrage in 2024. Interest in the deal has only accelerated since then. In essence, Nippon Steel Corporation of Japan aimed to acquire U.S. Steel at $55 per share, offering a decent premium over current pricing. However, legislators from both political parties have voiced opposition to the acquisition, leading to uncertainty and volatility. Former President Trump has entered the scene, declaring his intention to block the deal on his first day back in office if he gets reelected. President Biden also expressed reservations, providing union workers with a personal assurance that he would support them should they oppose the transaction. But the latter point may prove moot as the United Steelworkers Union prepares to kickstart confidential negotiations with Nippon Steel. Regardless of the outcome, U.S. Steel is attracting more attention now than in years. Should the acquisition proceed, it presents a solid opportunity for merger arbitrage. If the deal falls through based on government meddling, it'll prove U.S. Steel is essential to national stability, making it a top steel stock to hold for the long run. Number 2. ArcelorMittal. ArcelorMittal is not only a top steel stock, but a wildly overlooked value stock in today's market. The company trades at shockingly low multiples minus 0.4x book value and 0.3x sales, and it offers investors a solid 7.4% total yield when accounting for buybacks. Lest we assume ArcelorMittal is a value trap, looking at the company's financials tells another story. The company stands out among top steel stocks and most commodity companies because its profit improved post-pandemic, even as supply chain shocks destabilized global commerce. In 2020's third quarter, the company posted the last in a long string of quarterly earnings losses. Since then, ArcelorMittal has posted a profit each quarter, culminating in a $5.04 earnings per share over the preceding 12 months. At the same time, the company aggressively right-sized its balance sheet, slashing debt as rates rose and bringing quarterly interest expenses from $123 million in 2022's fourth quarter to just $31 million in the most recent period. ArcelorMittal is a solid top steel stock, and with fundamentals this strong, price to buy today, when combined with a willingness to work toward partial decarbonization, with $1.41 billion in state aid to boot. Number 3. Steel Dynamics. Steel Dynamics is a top steel stock based on its size as America's third largest producer, but also from its role in sustainable manufacturing. The company's core operational segments include robust metals recycling, which helps it boost its profit margin while helping keep quality metals in circulation. And, like ArcelorMittal, Steel Dynamics offers value-focused investors a solid 8.14% total yield at an attractive valuation. Better yet, Steel Dynamics consistently boosts its dividend, with the most recent hike hitting an 8% increase to 46 cents per share. That marks 5 years of consistent dividend hikes alongside a 100% quarterly payment rate over the same period, demonstrating Steel Dynamics' consistency and emphasis on shareholder value. 2023 marks Steel Dynamics' second-best year in revenue as sales hit $18.8 billion and a respectable $2.5 billion net income. Critically, over the same year, Steel Dynamics affirmed its commitment to shareholders by repurchasing 8% of its total shares, a hefty chunk of change considering higher debt costs and the inherently pricey nature of steelmaking and related operations. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.